A little over 24 hours ago, Bitcoin was down nearly 5%. The bears were screaming for joy. Yet 24 hours later, now Bitcoin has surpassed the top of the dump. Is it time to put this particular incident, this bearish narrative, to bed as yet another nothing burger in the Bitcoin bull market transitional period? Let's discuss that in today's video with a slight bias to the upside as the rest of the markets continue to hit new all-time highs. Now, these are just the facts from the charts. I'm trying to deliver this to you in amongst all of the fear, the doom, the gloom, the bearish narratives that keep coming at us, the analysts who we know and trust on Twitter, on YouTube, online. There is a plethora of bearish content, bearish narratives, and I'm just trying to show you the other side. Yes, it might be slightly biased, so please do your own research, have your stops in play. Let's get started. Hit that like and subscribe button down below. And I've got a few things to discuss with you later in the video as it's less than 24 hours until our free crypto and economic report comes out. That thing is packed full this week. So links in the video description. Guys, let's start it out with the macro markets. This is the thing that we've been looking at day in, day out on the channel. So I'm not going to cover it in great detail, but you can find the videos on the YouTube channel and of course on Twitter as well, as we've discussed these major macro bullish signs that are getting started for the longer term, for the months, the years ahead, not just the day to day. The first thing we're updating here, because it hit a new fresh low, is the VIX. So the VIX just measures the volatility, measures the fear and the greed in the S&P 500. And typically when this thing bounces to fresh highs, basically around that sort of 36 point level, this is the reading on the side here, you can expect that there's been a significant low in the market. And these other little bounces here are pretty significant at their time as well, and they are other lows in the market. Whereas these levels, these are typically some decent highs. And the middle line here is the point at 17. This is the point at which we typically see bull markets begin from. Well, basically they begin from the low, of course, but we can start to see an area where the bull market will start to grind its way higher and higher while the VIX drops, while the volatility index drops. And this can last for many, many years. Yes, there are going to be little pumps out of it, but we're looking for a bigger reading at the top here for a very, very significant low. So we can see that once the VIX gets under this 17 level, sure, there are a few little bounces out here. We're on a quarterly chart, remember, a very macro chart here. But it typically lasts under these levels for a significant amount of time before you start to see those higher lows form and the market drop into some sort of significant low. So the stock markets can stay at those levels for quite some time. The market is grinding down and down and down, just like it did in the .com. That's what this is here, the .com bust. And then it starts to grind higher. And you can see the low in the .com bust was here, October in 2002. So the low formed, plenty of time to be buying into the stock markets before it hits 17. But this is just looking at a macro signal here. When it starts to enter this zone here, this is the low volatility zone. This is the zone where it's safer for the market to enter bull markets and continue to climb higher and higher over the months and years ahead. This is not the reading where once it drops under here, you're going to see a massive collapse in the market. You may see corrections, but not massive collapses until this is time, until the time is up in this index. And you can see from history, it has lasted multiple years. You can see here it enters in 2003, 2004, and lasts all the way till the peak in 2007. So about 4 years there. Again, long time here. Very long time here. You can see it was under this level for quite some time. And we've just hit that zone right now in the last few months and reached new lows. So what can we expect moving forward? We can expect a bull market for several months. If we look at the shortest case like we saw in 2021, or in some of the longer cases, many, many years like we've seen in the past. And this was actually the biggest bull market, one of the biggest bull markets we've seen in history, even though there are some decent spikes above the 36 point level. That was in 2015, the China bubble, and the market eventually went on its bull market again. This drop in the S&P really wasn't that significant when you look at the overall picture. So we're into that zone now. It's up to you whether you think we're going to be here for several months or several years. Meanwhile, the S&P has put in a new, fresh closing price for 2023. Of course, we've been covering this for quite some time. We've got the October low, the June low. We've been covering this for reasons why that's the case, and we're looking for a March low as well. These are significant low points in the S&P 500 across over 100 years of history. These have come in time and time again, and we're just starting to break out of those zones, putting in a little volume here as well compared to the rest of the periods. So it looks like eventually we'll break through this 4,300 level and then start to tackle the next resistance levels between 45 and 4,600, only to then get on and test the 4,800 all-time high price. A long way from that at this stage, but these are all the early signs that you can see as the market transitions from a bearish market to a bullish market. Same deal for the NASDAQ, new, fresh 2023 closing price highs on the back of AI bubbles, plenty of different hypes, new all-time high prices for Apple. There is a lot going on in the markets, and many are still hoping and waiting for a massive collapse. Remember, there is going to be corrections, but keep an eye on where those corrections come to. If they start to break down significant low prices, then the markets are going to be in trouble. But a correction, a healthy correction, is going to be absolutely amazing for this market to reassert itself before it can start to push higher again. That's what we're looking out for here. I don't want to see any markets go straight up because the down period is going to be pretty severe. So let's hope that we do get some sort of correction as we get towards the resistance levels, and then we look to the downside of where that pullback, that correction could be, and we grind sideways potentially weeks, maybe even months before we get going again. Doesn't necessarily mean it has to happen. Maybe we blow straight through, but nonetheless, the main point here is the macro trend is up. The macro is bullish. It is in the beginnings of a bull market, and we do have probably a fair bit of time left on that. The other major thing, before we get on to BTC and cryptos, Ethereum, the real estate cycle. Now, of course, I go into this in a lot of detail with our members in the Investor Accelerator. So if you want to learn more about that, definitely subscribe to our free crypto and economic newsletter that's coming out today. We do go into the real estate cycle as well. So check that out. Link in the top of the video description. But this is also showing signs that we are heading up. It's incredible to believe that real estate is going to keep heading up. We're looking at the US, we're looking at the UK, we're looking at Australia, New Zealand, Canada, Western developed countries are all heading up when we look at the national pictures for those countries. Individual areas, maybe not, but the national picture, the data is showing up. And we're seeing that with home builders as the stock market climbs to a new all-time high for the biggest home builder in the US. More on that in the membership and more on that on the channel in future as well. So that's a look at the traditional markets, the macro view there. I think it's important to include that at the beginning of the video, even if it is just a quick recap. We cover it in detail in many other videos, but it's a good idea just to keep in mind where the bigger money is out, what is going on out there in the macro environment, because we can get too caught up in what's happening just in the cryptocurrency space as we do with BTC. So on the short term here for BTC, I've got a couple of notes here, and this was a tweet that I put out yesterday at this particular hour on the dot, looking at the Bitcoin price and the possibility that investors are missing the dips because of our macro picture. Our macro view here is that the Bitcoin market, Bitcoin itself, is transitioning from a bear to a bull. And so if we have that macro view in mind, then significant dips, which is what we focus on here, they are the dips to be buying. Not in other cases, say if you're getting into a very significant deep bear market, it's pretty much looking at the buy the dip opportunity on the way up as you follow the trend out of a macro cycle low. So that's the view we have for the macro picture here. This is how we go to make money. This is how we aim to make money, not just following headlines and all this sort of stuff. Because if we remember, the headline from yesterday was the SEC sues Binance. There is your SEC sues Binance. There is the dip. Here is the reversal. It has basically done the entire move plus some with 20 minutes to go until we get a close in here. So there's some significant levels that we need to watch for BTC right now. But essentially, this looks like it has turned into yet another nothing burger. So I'm going to get into that in a moment. But essentially, this is my chart here that I go through and just show all of the very significant news headlines, news announcements, bearish narratives in our overall wall of worry. Markets climb walls of worry. The worry is what's going to happen, what's going to collapse the market. And so if we're following analysts, maybe some of the favorite YouTubers or Twitter personalities, whatever it may be, that are forever talking about the fear that is out there in the market and what could happen next to dump the market, but they're not following a chart properly, well, then you pretty much end up in this position that every other retail trader ends up in, that every other beginner ends up in. And what I'm trying to do here is show you that there is another side to how this news is read. Essentially, all these pieces of news have become nothing burgers because the price has moved past them. And it looks like we're going to head on to moving past the rest of these nothing burgers very soon, probably the next several weeks to several months as the market continues to grind out, as we've talked about in our June analysis video, which I put out about 8 days ago now on the channel. So this was the tweet here. And the big thing here is the market psychology as a trader. The same investors that missed Bitcoin at 15,500 missed Bitcoin at 19,500. And I understand there are plenty of people who still think Bitcoin will go past that level. It's going to go to 12K. I see the comments. I don't think it's going to happen at this stage. They'll likely also miss this Bitcoin drop again. It's the trader psychology that matters the most at these times. And I posted that there. I was buying Ethereum at these levels. Michael was buying Bitcoin. We posted this to our members. So if you want to get involved in that, the link is in the video description, TI Premium membership there. Plus on top of that, you get access to our trading strategies. And the members now, our members here are making absolute phenomenal gains using our mechanical systems, using our swing strategies. You can see the gains here. They're absolutely ripping apart the market. 100%, 10s, 20s, 20% as well. So pretty honest reviews here, 300, 200%, 50%. These are just the updates since I showed you this last time from many of the traders here. 100%. Just crushing it. I've got plenty more to get through, but if you do want to get involved in learning how to trade the markets, then of course, check out the link in the top of the video description, trading courses and exclusive community here to trade these crypto markets. All right, back to the BTC data and where do we go from here? So as I said, this was the post here. This was a good buying opportunity. I think anything under that 27K level was pretty good. And it doesn't, I mean, Bitcoin's been under 26K for a few times now, but not that much when you look at the grand scheme of things. So going to the daily chart here for our support and resistance levels, let's get rid of that. 26,900 is the 50% level here. So we want to see a daily close above 26.9. You guys will get that answer probably by the time this video is published. The next level to look at is our 50% level at around 27.7. More importantly, around that $28,000 level, and taking it to the top, that's going to be a 28.2. So that's going to bring us above the previous tops here that the market was rejected at. And it's the 50% level, the current 50% level. And it also brings us at around the top of this consolidation range before the market broke out and then eventually went back under. So there's some pretty key resistance here at 28.2. It's a good thing that we're getting above the first step at the moment at 26.9. But ultimately for this consolidation, I'd love to see it get back above $28,200 and of course start to mount its attack at 29,000 and beyond. And Bitcoin can definitely get to that point as we are resetting the market sentiment. The fear and greed is resetting. You can see earlier, the market was getting very, very greedy and it was just starting to come down even though the price was trying to push higher. So this was through March and April. And you can see here that the fear started to set into the market. Well, there just wasn't as much greed, which wasn't able to push the price higher. And I can see here that we are resetting. We're back under the 50 level. And if you remember from previous videos, we were wanting this to get back to around that 40 level as a good reset point for the market sentiment. You don't want to see these markets too hot, but you don't want to see them too cold. You need to see them somewhere in between. And when they get to that in-between point, you definitely want to see the price holding up while it gets there. And so if we look at the fear and greed index, we're at about 44 at this point here. So somewhere around the low to mid 40s. When it was there last time, you can see the rejection here. This was back in November. Then we can see back in November, the price was all the way down here. So the market sentiment is resetting to around that same feel as it was back in November when it was at its lows. So that means that once we can get to a point where people are less greedy, not so fearful, somewhere in between, then you can start to find some consolidation over the coming weeks and months because there is a new base for the price. maybe it's in a particular crypto you're watching, but in this case, it's in Bitcoin. There's a new base for that price. And so people are starting to feel and see the value in Bitcoin at, say, $27,000, the same way they felt about it at $17,000. So that's a really good sign for the bull market to continue. You need to see the fear and greed absolutely reset to a good point and then start to mount that attack to the upside. And as Bitcoin mounts its attack to the upside, the dominance continues to grind sideways, in some cases increase. The main way for the dominance to increase at this point is for Ethereum to lose ground against its BTC value. However, ETH just is holding up relatively well. In the last 24 hours, it did have a nice move up and then back down to the same point. As you can see here, it's down 1.5%, back to 6.9% against BTC value. But overall, Bitcoin is still holding its ground here. The blue line is all of the total cryptocurrency market cap, including stablecoins, and the white line is excluding stablecoins. So this is an exclusive TIA indicator, which you can get access to if you join TIA Premium membership. There is a ton of inclusions over there in the membership. Okay, so what we want to see with the dominance is a potential Bitcoin breakout here. I think for that to happen, ETH BTC will also have to go down, but more importantly, we want to see a lot of those altcoins get flushed out, because that then also resets the crypto market, gives us some fresh blood or some time to bring in some fresh blood, and that of course brings on more altcoin seasons. So that's why we want to see the dominance continue to rise, or at the worst case, remain relatively steady, because Ethereum is taking over some of that market dominance from Bitcoin as well. So we cross over to the ETH chart just quickly. We can see that ETH is holding up very, very well compared to how Bitcoin has been holding up. Higher lows through this period here on that yesterday's bar where the SEC came out and sued Binance. It didn't make lower lows like Bitcoin did. Bitcoin made lower lows from May, mid-May into late May, and then again into early June, as we can see here on the daily. So there's mid-May, there's the end of May, and there is early June. This was slightly higher by a few bucks than this one, but overall that was a pretty decent downtrend. Whereas you can see the difference here with ETH, the lows are getting higher. So there is still some strength in the ETH USD pair compared to where Bitcoin is. Overall, ETH has really shown its strength over the course of this bear market, putting in cycle lows in June rather than November like BTC. It has the same March low, and now it's putting in higher lows at this point. Is it going to hold at that point? Can't say just yet, but overall it's been looking pretty strong compared to BTC during this bear market period. So it looks like it's going to be one of the big players moving into that next bull market. So that's it for today's video. I think we've got a lot of nothing burgers to get through in this episode. You can see we had the banking crisis, basically a nothing burger in March, a regional banking crisis, May, basically a nothing burger, US debt ceiling crisis, a nothing burger, interest rate hikes, nothing burger, recession fears, nothing burger. And remember to put these burgers into perspective with the S&P 500 and the NASDAQ as they continue to grind higher on the back of all of these bearish narratives. For whatever reason, many aren't picking this up, but you guys are here. So make sure you hit that like and subscribe. Share the content with a friend that may not be seeing it. Share it with an analyst who might not be seeing the bull market in front of their very face. I'd love to see the tag over there on Twitter. We can have a discussion over there. And of course, that helps out the algorithm. So thanks once again, guys. Hopefully I'll see you over in the group as well. Link in the top of the video description for our free crypto and economic report. Otherwise, I'll see you back here tomorrow for yet another video. Until then, take care and peace out.